Let's start that again. Hi. Thank you for joining me on this Friday afternoon. For me, it is 2 p.m. on Friday, October 5th. For everyone else, depending on where you are is where you're at, right? So let's get started on this trade. So we're going to start with the screen share to pull it up so you can see what's going on. And here it is. Now, last night or yesterday when I was on here, I told you the reason why I put my stop loss at 7,000 pips or $70 because my balance was 88.99.76. And the reason why is because of what the trade is doing. The trend it is doing. It has literally hovered around the negative 38, 39 to $40. It's not a worry. It's not a concern because if you look left to trade right, if you look over, you can see what the pattern of this trade is actually going to be doing. That's why I say go into the higher time charts of a day or above. Now let's start back at the beginning because there's many people that may not understand how to get a trade going, where to find the signals to do a specific trade. And there are 5 people that I follow on a daily basis. One being Stevenson Lindor. He and Orrin Wright is my second, are both educators in IML. If you want the information, you need to be enrolled in IML. So you need to sign up. If you want to sign up, get back with me and I'll get you a specific link for you to do just that. So my third person is actually Christopher Terry, who is our CEO of IML. And he has over 25 years of trading experience. So he knows what he's doing when it comes to trading. And the best part of it, his wife, Isis De La Torre, is a financial wizard. And she taught Christopher Terry how to trade. Now that's a pretty powerful combo right there, but it doesn't end there. My fourth person that I follow is my sponsor, whose name is Tracy Walker. And she does training, seminars, summits, webinars that will teach people how to trade, to teach how to notice the indicators, all the information that goes with trading. She's pretty wonderful about it. And my last one is not a person, but it's called Swipe Trades. And you get that through IML.com as well. That's part of IML education, iMarkets Live. It's all part of it because it's an app that we have that we put on our smartphones. They give us signals, information, ideas on certain trades and where they're going to go. Then you do your work. I'm actually doing what's called a naked chart because there are no indicators on here whatsoever, period. There are nothing. All you see on my chart is the stop loss, which is sitting at 0.61310. My entry price, which is sitting at 0.68310. And my take profit price at 0.75310. Now, if you take a look at this, going down into the 4 hours so you can see what I'm talking about, for my stop loss, it's a negative 7,000 pips or $70. Noticing my balance, that's not going to hurt if I lose it. And I don't pull anything out of my trading. I keep it there and only use it for trading unless I set up it to pay certain bills or to buy food, to pay me, because that's what you do when you have your own business. When you're an IBO, you pay yourself. It's just something that you have to remember, because you're not going to get a paycheck from a boss when you're an IBO. My entry price is 0.68310, and my take profit is sitting at 0.75310, which is also 7,000 pips or $70. Now, if you look at your trade, you can see what I'm talking about. Let me show you a little more. On a minute time chart, I can't see much here to understand what's going on with this trade. You might be reading a very expensive or elaborate novel that is holding your interest. In a minute, you might be able to read the first paragraph, depending on how quickly you read. Can't get much of the story with that, can you? The 5-minute time chart, you read a little further down that page, but you still don't know what's going on with this trend or this trade. You have no basis of where to put anything. Then you go into the 15-minute time chart, and once again, you may have read the first chapter if you're that fast of a reader, or you still don't have the story. You do not have the whole picture, so to speak. Going into the 30-minute time chart, you got a little bit more, and there are many people that trade in these lower time charts. There's no problem with that. It all depends on what you're comfortable with, your comfort zone as a trader. I'm going to try and make the light a little better. There. But I'm just not comfortable with a quarter of the story. Going into the hour time chart, you can trade here without an issue. If you want to trade less than an hour or an hour, go for it. But be aware that your risk to ratio balance is very high, and it's volatile many times. The 4-hour, many people stay right here, and it's great. But it only goes back to November of 2017, so it's not giving me the full story of what this trade will be doing. That's why I stick in the day time chart, because I can look back, and it goes back to January of 2014, meaning I have a good idea where this trade's going to go. Even though it's at a negative 39.79, don't panic. That's why we moved our stop loss to this 7,000 pip range, or the $70. And even if it hits my stop loss or I get stomped out, which doesn't happen very often when you have a margin level of over 4,000. Most people say keep your margin level above 100. I personally say keep it above 500. For my trading, for the extended time frame that I do my trading, I like to keep it around 25 to 3,000. Just as a comfort level, so I don't have to stay and stare at the chart 24/7. I like to be able to have my 8 to 10 hours of sleep and have a life and go do things. That's why I don't have to sit and stare at this. And the reason I stay in the daytime chart without any indicators, I can actually go back and see what this trade did back in February of 2016. It was in this area, but it didn't go very far. And even if it goes back to September of 2015, I'm still well within the range that I won't be stomped out. Now, a broker will stomp you out if he feels that you are losing too much. because they don't want to lose their money. They'll let you lose yours, and they'll do what is called stomping you out of the trade. Don't panic. We're in good hands, because looking at this trade, if it does not go back to September of 2015 and it stays in February, it will be turning around real soon. It might go down a little bit more, see right here, but it's going to fluctuate, hit its support, and bounce off. And it has a pattern where it hits 3 times and then goes up. Hits 3 times and then goes up. Hits 3 times. You see this? This is how it goes on a regular basis. Or a consolidation where it stays in one area for a period of time. Don't worry, we're doing well. There's no worry here. So what I'm going to do now is I'm going to stop my screen share and see if there are any questions. Yeah, thank you for following me as long as you have. I really appreciate it. Yeah, I come in 6 times a week. No more questions? Going once, going twice, and gone. Now, what I want you to do for the remainder of this day is to go and check your trade. Check and see what you're doing. Pull up the daytime chart and follow it back. Always, when you trade right, you look left. Follow it back, and you can actually see what that trend is doing on that trade. It will show you every time, and it will always repeat itself. That's how the market goes. And thank you for joining me, and you go have a fantastic remainder of your day or night, wherever you might be in the world, and I'll see you tomorrow. Bye for now.